All you need to become profitable is one candle. My name is Faz, and I've helped hundreds of students get funded and get payouts consistently. Now, I've been trading for over 8 years, and what I've found is that the more you overcomplicate your trading, the more you're gonna blow your accounts and not get consistent results. I've seen people use 5, 10 concepts together to frame a trade, and when they put in all that effort and get no results, they get demotivated and then they try to overtrade or revenge trade because they are frustrated at that point and they just want to make some consistent money with trading. But what if I told you that you don't need to overanalyze your markets? You don't need fancy concepts like auto blocks or fair value gaps and pair them together to take your trades. Look at the higher time frames, like find your daily bias. Because since I've started uploading videos on YouTube, I've always tried to not complicate things. I've always wanted to keep things simple so a lot of people can trade actually and make money. So in this video, I'm going to teach you the entire strategy. It is very simple. I use it mainly with gold and NQ. There are different timings for NQ and gold, but for this video specifically, I'm going to talk about gold, and I'm also going to give you the timings about NQ and why I'm talking about time. I'm going to get into that later in the video, but for now, I'm going to just teach you each and everything about this strategy. Again, you need only one candle, and once you have that one candle, you will know exactly when to buy and when to sell. That candle alone is going to tell you when to buy and sell. I'm not kidding over here. So very first thing, what you have to do, this is very important, is that you set your time zone to New York, okay? Now, whatever timing I'm about to teach you guys about, it's going to be based on New York time, all right? So if I say 8:30 New York time, then you don't have to look at your own time zone. Just focus, go into the trading view and see what time it is, and then you will not get confused. Now, the very first step is that, let's say first thing first, you have to go onto the hourly time frame, okay? So 1 hour. And there's this one specific candle that forms at a very specific time of the day, and that is basically the 7 a.m. candle, okay? Let me just do that real quick. So 7 a.m. candle, and this strategy specifically, this timing specifically is for gold only. For NQ, that would be 8 a.m. okay? So note that down. For gold, we're going to use the 7 a.m. and for NQ, if you trade futures, then that is going to be 8 a.m. New York time. Now, since we're trading gold, we're going to look at the 7 a.m. hourly candle. All right. Now, the next step is very simple. All you have to do is mark out the 7 a.m. candle high and the 7 a.m. candle low. Now, once you have that, what you can do, first off, I'm going to teach you a setup, and then I'm going to teach you a plus setup. All right. But first thing, you need to know that no matter if you trade a setup or a plus, you are going to stay profitable. All right. Now, the big problem that I've seen with traders is that they try to find a strategy that has 70-80% win rate with 1-to-2 or 1-to-3 and above risk to reward ratio. To be honest, that is not realistic, and I just want to set your expectations right, because whoever says that they have a strategy which has 70-80% win rate, a consistent win rate, I'm not talking 1 week or 1 month, but consistently they have 70-75% win rate 1-to-2, they're just lying to you and they're selling you a fake dream. As long as you have a 50-55% win rate or even 45% win rate with 1-to-2 risk reward consistently, you are going to make money, because trading, let's be honest, is the hardest way to make easy money. And if you don't believe this, then I'm sorry, you're never going to succeed in these markets, because you're always looking for the holy grail that just doesn't exist. And let's be honest here, I'm not here to sell you a fake dream. I'm here to teach you real trading, easy trading that actually works. You don't have to use multiple concepts. Well, that out of the way, let's continue with the strategy. So once you have marked out the 7 a.m. candle high and low, so this is a setup, right? All you're doing is basically, when the next candle opens, you're waiting for price to either sweep out. So let me just use a better tool. So when the market opens, right, what you want to do, oh my god, dude, this is white as well. Let me just make it black. Okay, so what you want to do is wait for price to either sweep out the low or the high. So let's say that price sweeps out the 7 a.m. low. Now the next step is that you have to drop down to 2-minute time frame. We're not going to 1-minute time frame, because since we are trading gold, 1 minute is just too volatile. So we want to go to the 2-minute time frame. Now here is the entry model. All right, this is very simple. You're going to look for CIST, okay, change in the state of delivery, or market structure shift. If you get market structure shift, that is better, but I always stick with change in the state of delivery, because when you look for that, you're not going to miss out on the move. So what is exactly is change in the state of delivery? Consecutive bearish or bullish candles that sweep liquidity, and when price closes above the bodies of consecutive bullish or bearish candles that swap liquidity, then that is change in the state of delivery. So for example, let's say from this high to this low, we had consecutive bearish candles, right? Now you want to mark out the highest candle body, and then you have to wait for price to close above the body of that first candle of the consecutive candles that swept out liquidity. I hope you understood that. So this is step number 1, change in the state of delivery. Step 2 is closure above the range. Okay, closure, I don't even, man, oh my god, I'm tripping. Close above the range. Okay, so once you have changed the state of delivery, what is range? So this is range low and this is range high. This is the 7 a.m. range, right? Now on the 2-minute time frame, we first need to see a change in the state of delivery. Once we have that, we are looking for a closure back above the 7 a.m. low. So we need to see a closure above that as well. That is then going to confirm that we are set for a long position. And now you might be thinking, this can't be this easy, right? And it is that easy, guys. Trading is supposed to be simple. All you need is small edge, and there's an algorithm that operates specifically at this time. All right, so once you have changed the state of delivery, once price has closed back above the range, all you're simply doing is looking for a retest entry, or you can enter right away without waiting for a retest. Now for your take profit levels, let's say you take a long here, you put your stop always below the low, and my final TP is always going to be the opposite high. So this is the low and this is the high. So this is the opposite side liquidity pool, buy side liquidity pool. So that would give you around 4.3 risk reward. The beauty of the strategy is that sometimes you're gonna get 1 to 3, 1 to 4, 1 to 7. Sometimes even I've seen 1 to 10 risk reward trades. And I'm gonna give you guys a lot of examples for this strategy, and you guys will understand everything. But for now, you really need to understand that once price takes out the 7 a.m. low or high, wait for a change in the state of delivery, wait for price to close back above the 7 a.m. low in this example, and then take your entry directly, or wait for a retest. It really comes down to personal preference if you want to take your entry on the retest or just enter aggressively. I personally like to enter aggressively when the candle has not, when price has just not pushed way far up. I'll just wait for a retest then. But if price has just closed slightly above the bodies of the consecutive bearish candles that swap liquidity, then I would just enter aggressively. And for break-even rules, I don't usually go break-even for this strategy, but a good thumb of rule could be like take one partial at 1 to 2 risk reward. So you're not like sitting on your charts for an hour or two and not making any money, right? So you can take one partial at 1 to 2 and then you can go break-even. But personally, I just like to hold no matter what happens. And I know this may sound dumb to a lot of people, but since it's a mechanical strategy with tested results, I've shown results in the previous video. It was about NQ. It has an insane win rate, but it works with gold as well. But I've noticed that only the timing is a bit different. So 7 a.m. for gold and 8 a.m. for NQ. And yeah, of course, then if you flip the chart over, it would look the same. If we sweep out the 7 a.m. high, we would look for a change in the state of delivery on the 2-minute time frame, take our entry aggressively or on the retest, and target the opposing low over here. Now that is a setup. What exactly is a plus? So when you are on the 1-hour time frame, see if you have a unmitigated auto block or a fair value gap below the 7 a.m. low. So if there was a, let's say, an auto block over here, a single candle auto block, okay? So if you have consecutive bearish candles that swap liquidity, well, that is your auto block. But what you want to do is choose the last candle of that auto block. So for example, if you had one candle here, then one candle here, and then one candle here, right? I'm trying to explain this as clearly as possible. And then we swap liquidity, and then you have this last candle of the auto block, right? Then that is going to be your like key level. So let's say that price kind of like taps into this PD array as well. Now that is a plus setup. When we are tapping into a 1 hour PD array, and then we are also like taking out the 7 a.m. low, and then we get a change in the state of delivery, that is a plus. And I usually look for this type of setup. If the PD arrays, the key levels are not present at that time, I just take the simple A setup and I get great results. So now that we have the strategy out of the way, I'm going to give you guys a lot of examples, and that is going to give you confidence, and it is going to clear out each and everything. All right, guys, so here is example number 1, looking at gold. This is the 7 a.m. candle. So what you want to do is mark out the high and the low of that candle. Now, as you can see that we took out the high and then we took out the low, right? So now I want to go on to the 2-minute time frame here, and I want to look for change in the state of delivery, or honestly some sort of like inversion right on the 2-minute time frame, or anything that confirms the price wants to go down. So it could either be change in the state of delivery, market circuit shift, or inversion. For example, we have only one fair value gap, actually 2 fair value gaps here, right? Now this could have been your entry at the retest, or you could have just simply waited for a change in the state of delivery, consecutive bullish candles taking out liquidity, right? When price closes back below them, that's step 1. Step 2, are we below the range? So this is the range high. We have closed below the range. Now, since my candle is here, I would definitely wait for a pullback, right? A retracement, so I can get better entry. The simple way to do that would be to just use your Fibonacci and take your entry from the 50%. I think that is the ideal way to take an entry here, because there's just no auto block over here, a clear auto block. And then you could put your stop above the high, and you need at least 1 to 2 risk to reward minimum. So in this example right here, you can see that 1 to 2 was not at the opposing low over here. So then what I would do is, as soon as price hits the low here, I would move my stops to break even, right? And then I would basically just hold till 1 to 2, because that is the minimum with the strategy. Let's move on to the next example now. All right, so here is example number 2. And as you can see, we have the 7 a.m. candle right here. So what you want to do is mark out the high and the low of that candle, right? And pretty much you can see that we took out the 7 a.m. low, and then we took out the 7 a.m. high. Also, one key thing that you can use is just look at the higher time frame auto flow, or the overall like trend, and then just trade in that direction. But it's just not necessary. If you want to use some human logic into this, then you can of course do that, but I like to keep things mechanical as possible. So let's go on to the 2-minute time frame to see what actually happened. So you can see that right here we took out the 7 a.m. low. This was the low, we took that out. Now we're waiting for change in the state of delivery. So we have a lower low, lower high, lower low. We swept liquidity. This down close candle swept liquidity, so that is your auto block. What we need is a closure above that, and that would make an auto block, and of course that would give us change in a state of delivery. So if you can see clearly here, we slightly closed above the body of this candle, so that is CIST. And then I would just pretty much enter right away, wouldn't wait for a retest because it's just too close. Would put my stop below the low, and then of course we have the 7 a.m. high resting around here, and you can see that price went up and then took out that level, giving you 1 to 2.53. If you took one partial at 1 to 2, that would have been nice. You could go break even at 1 to 2, and then the full TP would be here. The reason why we always maximize our profits is because you're going to have 60% win rate, 55% win rate, 65% win rate if you're using the A plus setup, around 55-60% when you're using this setup. But you're going to make 1 to 3, 1 to 4. Try to understand that you don't need higher win rate to make money. All you need is a higher risk to reward ratio. Okay, this is real trading. Let's move on to the next example. All right, guys, so here is the last example. So you can see that we have the 7 a.m. candle, right? And of course, news is going to help you as well, because remember, when we have high impact news, we're going to see some form of liquidity purge, and then we're going to move into as the original direction. And also high impact news is kind of like inject volatility into the market, so that is good for us ICT traders. So over here you can see that we have a 7 a.m. candle. right? And if I mark out the high and the low of that candle, you can see that first, actually, we took out the 7 a.m. low this time, and then we took out the 7 a.m. high. Also, kind of, I believe, taking out the London high. So since we have taken out both of the sides, let's go to the 2-minute to see what actually happened. So you can see we have the 7 a.m. high resting here, which are basically equal highs, relatively equal highs. And then again, we have the 7 a.m. low. Now over here, you can see that we took out the 7 a.m. low, and then we have consecutive bearish candles. Now this could have been your CAST level as well, because if you look closely, we have lower low, lower high, and then a lower low. But you could have been a bit more patient, and then you would have waited for these candles to get broken. So you can see we closed above the body of this candle. That is your CIST. And then pretty much I would honestly just take a long position right here, put my stop below. Okay, so since this wick is too big, I would just put it below the 50% of this wick, just like the ICT does, right? I was slightly somewhere around here, okay? And I'm just using a bit logic here, okay? And then you can see you could have gotten 3.07 here. Even if you put it here below the low, of course, you would have gotten 2.5 risk to reward ratio. Strategy is crazy. Go and back test. Again, you're not going to win every single time. But since you're getting 1 to 2, 1 to 3 risk to reward, win rate doesn't really matter. Trust me on this, guys. I've been trading for so long. I know how things work. You're not going to get 70-80% win rate, especially with 1 to 2. Sure, if you have 1 to 1, you can get 70% win rate. But if you need 1 to 2, 1 to 3, this is reality, all right? I don't have a magic ball like that I can flip and then give you like a very high win rate strategy. You need to understand that you got to set your expectations right. If you don't do it, if you keep watching those traders who flex their Lambos every single day, even though they have made all that money with their mentorships and coaching programs, I kid you not, they bought that Lambo with their coaching programs, okay? And I'm not saying that you can't do that with trading, but just be careful and set your expectations right. No one is going to tell you that in the trading space, but I genuinely want to help you guys become successful in this industry. I'm going to see you guys in the next one. Take care. Goodbye.